All right, new home buyers, welcome. Super excited about this first step in the new home buying process and in our new home buyer's guide. And that is simply applying for a pre-approved mortgage. So ultimately, by the end of step one, we're going to have talked through how to apply and get pre-approved for a mortgage. Now, I've split it up into two videos because there's kind of a step you need to do before you apply for that mortgage. And that's what this video is about. We need to talk about two things: your credit and the down payment. And the reason we want to talk about it now is because you want to understand your position with these two things before you apply for the mortgage, because whoever you speak with, whatever lender you work with, they're going to want to know these things, and these things are going to play a part in the process. So let's take a look at them right now and dig into what your credit looks like and what the down payment looks like. So in this video, you'll get the inside scoop on A, your credit, what it looks like and how to figure that out, and if it doesn't look good, how to fix it, and then B, the down payment, what you can do now so that you have some money to put down at the beginning of the process. So I wanted to first dig into the master checklist. And if you haven't already downloaded this checklist, right below this video is the New Home Buyer's Guide workbook. And that workbook has all the information that we're going to go through in these videos and lays it out for you. It has some great worksheets to keep you organized, make sure you have the process together the whole time. And this master checklist will refer back to at the beginning of every video, so we see the progress we've made and what we've succeeded at, all the way from where we're at right now, the very beginning, to the end where you've purchased the house and you've moved in to your dream house. Right now, we don't have anything checked off because we're right at the beginning. Check our credit and save for down payment. We're going to nail that right now, and then we'll move on to the next steps. Let's start, though, with a fun fact. The first use of the word mortgage had nothing to do with home loans. Imagine that. It actually was in a poem in the 1300s. So what, like 700 years ago. And the word was used to describe marriage, not a home loan. So the connections or disconnections you can make on your own, but that was the first use of the word mortgage. And obviously it's evolved to the point it is today. So why are we applying for a mortgage? Well, most likely you aren't the only one investing in your home. Unless you have hundreds of thousands of dollars available to you to pay for a house in cash, you will likely need a financial partner, someone to loan you the money so that you can purchase the house of your dreams. And that financial partner is a lender, a mortgage lender. And so step one in the process of buying a new home is applying for that mortgage, going to a lender, maybe more than one, and asking them if you can borrow money from them and what that would look like, what it would cost you in what's called interest, or money you're going to pay the bank for the right to borrow money from them, so that they will loan you the money and let you purchase this house of your dreams. And so we need to apply for the mortgage, and really getting pre-approved for the mortgage is super important because then you understand what you can borrow. So when you go out and start looking for houses, then you know what range you're in. If you can't borrow $400,000, you don't need to be looking at $400,000 houses because they're out of your range. They'll just make you feel sad. You want to know what kind of money you can borrow so you know what kind of house you can purchase. But there are two things we need to address first, and I've already articulated it. Number one is your credit score, and number two is the down payment. So let's dig right away into your credit score and see if we can figure out what's going on with your credit right now. So inside that workbook that I've created for you, the New Home Buyer's Guide workbook, there is a page 7, that talks exactly about how to check your credit, how to figure out what your credit looks like. And we're going to kind of go through that right now. Basically, you want to go out onto the internet and you want to find out what your credit scores are. Now, you often hear you have a credit score. It's not exactly true. You actually have 3 credit scores. There are 3 different organizations, Experian, Equifax, and TransUnion, that all create credit scores for you. Now, they're usually fairly similar because your financial history is what it is, but they can be a little bit different. And so you want to go out first and get a sense of what that score is. And there's really 2 things you need to do to understand your score. And I'm going to bring in my web browser here so we can kind of take a look. The first thing, in my opinion, that you want to do is go to annualcreditreport.com, and there's a link for that in this video as well as underneath the video and in the workbook. And This is not going to give you an actual score. When you go down here and you go to this request your free credit report, you're going to go through a process of putting some information in. And I'll click this button, but I'm not going to go through the whole process. And you're going to fill out some information, pick the reports you want, and request a review your reports online. And you should get that right away. You can do it once a year for free. It's kind of federal law that you're allowed to do that. What it's going to give you is not some score. It's going to give you your credit history, the down and dirty details of exactly what's going on with your credit, how many credit cards you have, if those credit cards are in good standing, meaning you've paid your payments every month and kept up with them, if there are problems, issues with them, if there's cards that haven't been paid, credit that hasn't been dealt with. Those things are all going to come up in this free credit report. And the reason that's important is you want to understand exactly where your credit score is coming from. If there's problems, you want to know what those problems are. And this free credit report will tell you exactly what those problems are. We'll address it a little bit later in this video, what you can do about it. But what you want to do here is get that credit report so you begin to understand what's going on with your credit and why. If everything's great, if everything looks wonderful, then all is well. If things aren't, then you're going to want to address that and make it better. There are lots of places to go for your actual credit score. The place I would suggest is freecreditscore.com, but there's lots of them. And if you go through this process, this is going to give you the actual number. What is the number that's been figured as your credit score based on your credit report and history? So the number you're going to get on this site is based on the information that you got from your free, annual credit report.com. So this is the two different parts of figuring out your credit. You want to see the history and the details, and then you want to come over here and get yourself a number. So those are the two places I would go to get the information about where your credit score is coming from and what your credit score is. Okay, so you went to those two places and you got all the information you needed. And in this sheet, I've got spaces where you can put your different credit scores in, your Experian credit score, your Equifax credit score, and your TransUnion credit score. And then if you just take those three numbers on a calculator, add them up, and divide by 3, you should get an average score that is your average credit score and what lenders are going to see when you start off asking for that pre-approved mortgage. So step 1 is do an online credit check, and I showed you that annualcreditreport.com. Also, you might go to freecreditscore.com, or you can just Google get my credit score, get a free credit score, and there's options out there to go ahead and get your credit score and take care of that stuff. And then you're going to put the information into the workbook and take the 3 credit score numbers that you have, divide by 3, gets you the average score, and you'll get a sense of what your actual credit score is. So what does that credit score mean? Well, if your credit score is above 740, it's great. In fact, most mortgage lenders will tell you that 740 or above, there's no difference. As long as you have a 740 or above, you're going to get kind of the best interest rates on mortgages. You're kind of in their idea of the best credit scenario. If you're above 640, you're okay. You're likely going to still have access to, much of the different kinds of mortgage options out there. Lenders will be more than willing to lend to you if all other things look good. And so above 640 is really, the bottom of where you want to be. And if you're below 640 right now, well, frankly, it can be a problem. So if you're below 640 right now, I'm going to talk in just a second about how to fix that, but you may want to spend a little bit of time trying to fix your credit before applying for a pre-approved mortgage, because you may just end up in a better space. So obviously, situations are different. If you have to try and go get a mortgage right now and your credit is below 640, there are likely some options out there for you. But if you've got some time, and you want to have better options for a mortgage and your credit is below 640, I would strongly encourage you to work on that credit for a little while. Get it fixed and then get pre-approved for a mortgage. You're going to be in a much better situation. So let's say you are below that 640. How can we fix bad credit? What can we do to fix low credit? And there's a bunch of things we can do, and I'm going to talk about them here. So the first thing is dispute any errors on your credit report. So if you went to and you got that free credit report and you were looking through it and there was some bad stuff on there and you were like, wait a minute, that's not even me. Or wait a minute, I solved that a long time ago. Or any of those kinds of things, then there's a process you can go through to dispute errors on your credit report. And you can go back to annualcreditreport.com and there's information on there about how to dispute errors on your credit report, or you can just Google it and, figure out what the process is. I'm not going to go through it in this video because there's plenty of information out there and videos on YouTube and things of that nature that help you walk through that process. But if you find errors, you definitely want to go through the process of getting those errors fixed, and that could immediately bring up your credit score from where it is right now without any, time passing. So that's a great thing to do if it's possible. Next things, let me just get my mouse back up there. There we go. Next things is, a major factor in bad credit is letting things you owe go past due. That's almost the biggest thing. Usually if you have bad credit, it's because you let something go past due. You had a credit card and you didn't pay it when you were supposed to. You didn't pay the minimum amount per month. So you want to start fixing that problem. Obviously, you can't change the past, but we can certainly change the future. And so we're going to start doing that right now. And that can be as easy as having a calendar, Google Calendar or something like that, and set payment reminders if you have to physically make payments so that you don't forget to do them. What I do in my life is I set up automatic monthly payments. So I basically have all my bills set up by automatic monthly payment, and then I, check my register, check my online banking, and make sure that I have everything balanced and there's money to cover it and all that kind of stuff. But I have it set up to automatically pay, so there's no issue with forgetting to make a payment. So that's another thing you can do to address late payments or making late payments. This is a little harder, but if you can reduce your debt, so if you have credit card debt and you want to try and fix that, one way to do that is to kind of refinance it into a loan, but you want to be careful. If you're going to try and do that, you got to know that actually getting a loan to cover your credit is going to potentially negatively affect your credit for a short period of time because you've applied for a larger loan. And so you would have to know that you're not going to get a mortgage for maybe 6 months or something after that. But if you can pay your debt down, get a birthday money or something like that and make sure you pay that debt down, it's a great way to fix your bad credit. And then, if you can increase your income, easy to say in this video, obviously a lot harder to do. But if you can increase your income, that affects your debt to income ratio, and that has a factor in how credit is figured. And so if you can increase your income, then it looks a lot better, and that can fix your credit over a period of time as well. So most important things are getting anything off of your record that is incorrect or wrong, and then just making sure you stay current on all your monthly payments on your credit and things of that nature. There's nothing wrong with having credit cards. It's just making sure that they're treated well and taken care of and paid on time. All right. So that's really your credit, addressing your credit there. But then I talked about the down payment. So the second piece that we want to be thinking about before we even apply for pre-approval on a mortgage. So now let's talk a little bit about the down payment. So the best loans ask for 20% down. Another way to say that is they want to only loan you 80% of the value of your home. So if you're purchasing a $200,000 house, then what would that be? 160? You would want to borrow about $160,000 in that example. Those are the best loans. Now don't freak out. Or on a $150,000 house, that's $30,000. So, in that situation, you may have to have a $30,000 down payment for that kind of loan. But don't freak out just yet, because if you don't have that kind of money, I know I didn't have that kind of money when I bought my first house. I don't necessarily have that kind of money now. So, there are different options and things that we can do. So you want to make a plan right now. If you're not in the process of looking for a house yet, you have a little bit of time. Again, fixing your credit is great, might take a little bit of time. Making saving for the down payment is another great thing you can do right now. Even if it's just saving $100 a month or saving a couple $100 a month, putting in a side account that's saving up for that down payment. It's going to work out better for you when you go ahead and get the pre-approval for your mortgage if you have a chunk of money that you can pay down. I know when I bought my first house, I didn't have a huge down payment. I think that's the next slide here or the one after that. If you can't make the 20% down payment, you are not alone. Why aren't you alone? I, for one, borrowed about 95% of the purchase price on my first home. So I didn't have a 20% down payment in any way, shape, or form. And that 5%, my parents helped me with, so, they put a chunk out to help me purchase the house. So I didn't really have any down payment, and I was completely unprepared to purchase the house. And I did it anyway, and it worked out fine. But if you can save up for a down payment, it's going to make life so much better for you. Your financial situation will be much better when it comes to the mortgage. So if you don't have down payment, don't freak out. Just start saving up. But if you can, have as much money available to you for a down payment as possible. So there are downsides to borrowing, more than 80% of the value of the home you're going to purchase. And two of those downsides are, oftentimes you're going to experience higher interest rates. You're not going to get the best loan options. You're going to get loan options that are available for people who don't have down payments. And those have slightly higher interest rates and sometimes a little bit more unfavorable, options and things of that nature. And you may have to pay what's called private mortgage insurance, which is an extra little amount on top of your monthly mortgage payment that pays for essentially an insurance policy to protect your lender in case something bad happens, because they're lending you almost the full value of your home. And so if something bad happens and you can't pay your mortgage and suddenly they're in a position to have to try and sell your house, they likely aren't going to get as much money as it's actually worth because they're not in your community, all those kinds of things. Private mortgage insurance protects them for the difference between what they can actually get out of your house and what they borrowed, what they loaned you. So you have to pay for that, though. So you may have to pay a little bit for the private mortgage insurance. You might have to pay slightly higher interest rates. So again, having a down payment is great, but it doesn't mean you can't get a mortgage if you don't have a down payment. So don't worry too much about it. Those aren't the end of the world, those two things I just described. It's just important to understand and know as you're going into getting pre-approved for a mortgage. So if you have questions about any of this stuff, when you start talking to a lender, and our next video will address that, ask your lender to explain the options. If I have 10% down, what are the different options if I only have 5% down, or if I have 20% down? If you have the ability to think ahead and save up for the down payment, then you may want to know from a lender what the different options are and how worth it is to try and find another $5,000 or whatever it is that you're trying to experience. So talk to your lender and have them explain the different options that are available to you. So what is the rookie mistake for this video? What's the thing that rookies would do that you are not going to do because you're on top of things and you're a part of the New Home Buyers Guide community? And that rookie mistake is letting any credit payments get late. This is the best way to crash your credit score and the worst way to bring your credit score up. So starting right now, make sure that you have a system for your credit card payments, any loans you have, making sure that those things get paid on time. I know it's kind of a pain, but it's super important if you're going to buy a house. So that's the rookie mistake, letting any credit payments get late. All right, what did you learn? Well, you got the inside scoop on your credit. I hope you're feeling better about how to figure out your credit, how to know what your credit means, how to know what's behind everything, and how to figure out your credit score and how it affects your mortgage that you're going to get. And finally, a down payment. Main message here is just do your best to save up for a down payment. Is it the end of the world if you don't have $20,000 hanging out? No, it's not the end of the world. But if you can find ways to have dollars to put up when you get that mortgage, your mortgage is going to be a lot better for you, and you're going to find yourself in a better financial position. Finally, what's next? Well, we're going to go to step 1B, the second part of the getting pre-approved for a mortgage, and that is simply getting pre-approved for a mortgage. How do you do that? How do you go out and get pre-approved for a mortgage? What are some inside tips? What are some things that you can do to make sure you find the best lenders and the best mortgage options? That will be the next video. So what I'd like you to do now is head over to the Facebook group and share how you're feeling. If you don't know how to get to the Facebook group, go back to the dashboard of this course. There's a little button on the bottom right, and it says go to the Facebook group. It's a closed Facebook group, so you'll need to ask to be invited and we'll let you in. But you want to do that because at the end of each of these videos, I'm going to encourage you to go over there and just share how you're feeling, because there's a whole community of people over there that can support you, that can tell you that they're in the same position you are, that can tell you maybe how they got out of it. Great advice over there on that Facebook group, and a really wonderful asset as a part of the new home buyer's guide. So you need to head over there and talk about what you were surprised about, what you're confused about, what you're wondering about. Ask all those questions over there and contribute to the Facebook community. And we're right there and ready to answer your questions. All right, we addressed your down payment, we addressed your credit score. We're ready to head over and dig into getting approved for a mortgage. Can't wait to get started.